Welcome to another episode with Loans Elevated. My name is Broch Lassig, top 1% loan officer nationwide.
And I'm TJ Heidenreich. Together we bring the latest news, strategies, and insights in the mortgage and real estate industry.
Okay, back for another episode with a special program that we just launched, a huge opportunity for homeowners out there with technology coming and really making a wave in the loan industry.
Yeah.
Teach, dive into this HELOC program.
Yeah, so this HELOC, the thing that's so unique about it, you can have a HELOC on investment properties, which is pretty much unheard of. And if there is a possibility elsewhere, you can get like minimal out of your HELOC. Like we're talking
very limited, very tight
100K.
qualifications. Well, and the terms are really, really ugly on investment property HELOCs. These terms, based on our experience, some clients that have done it are actually, they're crushing other competitors' options. We don't even know if they will even approve it, really,
for
on
sure.
the investments.
No, definitely. So if you have an investment property, you can get up to 70% loan to value. So whatever your home is valued at, you can get up to 70% out of that. Up to $200K. I think it's $200,000.
Yeah, I think it's $200,000 and up to 85% on a primary residence. I think the limitation is higher on the primary.
Yeah, it is. I think it's. Oh, I
can't remember exactly, but
we'll
anyway,
put the
some
exacts
limitations
up on the screen right now. But I think it's around $500K.
Yep. And the cool thing is, like I said, it's technology focused. So this system is based on the blockchain. It is 100% automated. So we get an approval, like literally you get an application link, you fill it out, you have an approval in as little as 5 minutes. The clients that I've had do it, this is a brand new program, only about a week old. So there's only a few clients that we've had go down the process, but the clients that I've had work on it, they apply and that same day or the very next morning they have approval and they're closing either same day or the next day closing, and they're getting funds within 5 days of application. It is like, it's insane.
And to put that in perspective, I did a HELOC last year. It took 60 days. And it wasn't like I had any qualification issues or anything. It was just the time it took. It took 60 days from the application start date to me signing at the closing table. And I had to jump through so many hoops. I had to go to a credit union and legit create an account with them, like a savings account. None of that's needed.
Provide a bunch of documentation just as if you were buying a property, get a full-blown appraisal in most cases.
Had to wait for an appraiser to come out.
Yeah.
Clean the house.
It's a nightmare and annoying, not nearly as fast, and the terms are sometimes not even as good as what this program offers. Now, we've been thinking through, like, how can we leverage this the best? Obviously, if people want to tap into their home's equity, this is a really, really good program, a streamlined, simplified way of accessing that equity. But we came up with some other ideas, like, for example, a bridge loan alternative. So a lot of people are going down, the market is shifting again, where it's competitive, and a lot of people are going down the path thinking, man, I have a ton of equity in my house that I'm selling, but I really want to lock up another property and maybe even close and buy that property with that equity, but I don't want to sell my vacating home first. This is a great option that's not nearly as expensive as what a bridge loan would cost, and also not nearly as complicated as a bridge loan would be.
No,
it's
for
so
sure.
simple.
For sure. Well, another strategy is the low rates that we've had the last 2 or 3 years. It's created accidental landlords, people that maybe they don't want to sell because their payment is so cheap. You could take equity from that home and buy a new primary residence, and you don't have to come up with a down payment. You can take the funds from the vacating residence.
Yep. Or even if you own, like we know a lot of people that intentionally did what you just said. They basically bought a home and then upgraded their home and rented the old home out, and they did that a couple of times. You have a client that did it like 5 times, right? In just a few years period. But those people don't want to interrupt the mortgages, the long-term mortgages they have on the real estate they already own, because most people, if they own real estate several years ago, are in the 2-3% range. And you don't want to mess with that payment, but you also don't want
the amortization schedule. They don't want to mess with that either.
Exactly. You don't want to mess with the amortization, but you also don't want all that cash or equity tied up with the inability to leverage it and purchase more real estate, or do the things you need to do. Like sometimes it's just simply debt consolidation to save money, or getting liquidity for whatever. I mean, kids call, it doesn't matter. Like you can use these funds for anything and retain the really good loan terms you have on your fixed mortgages that you got back when the rates were so low.
Yeah, definitely. And having a HELOC, if you don't even understand what a HELOC is, you don't have to use the funds. You can have a HELOC set up, and it's like a credit card. You can just have it sitting there waiting on the sidelines until you until something comes up that you need to deploy the funds to use.
Yep. Oh, and we didn't even talk about this. One cool thing about this program, it's a fixed rate and term program. Massive, but you can revolve it like a HELOC. But the cool thing is you can get a 30-year term, and it's revolving.
And it's not interest only.
Exactly. Yeah. Well, you can choose either interest only or amortizing.
Oh, cool.
Yes.
Sweet.
During the draw period, you can choose the interest only.
Wow.
And then it goes amortizing, but it amortizes for 25 years.
That's crazy.
It's insane. Yeah. And it's fixed, which is a very unique piece of this program.
Most HELOCs, they have like an introductory rate, but then
a teaser rate.
Yeah, you have a teaser rate for like 1 year. And after that year, it's a variable rate. It's always going up or down.
Exactly, always moving. In this program, the cool thing is if you take a new tranche of money and rates have come down, the new tranche of money would be locked at the lower rates.
Yeah.
So that's pretty cool. So if you paid the HELOC down, and so if you borrow the money, it would be fixed at whatever rates were at that time. But if you paid it down and then reborrowed money, in theory, because rates are probably at their terminally high rate right now, they're probably only coming down. You'd have the opportunity to lock in that debt at a cheaper rate long term.
So you know you have a ceiling. And there's potential to get lower.
Yep. Pretty sweet. So anyway, we thought this was a really powerful program, something we're super excited about. If you want additional information, please hit us up. It's an easy process, and we would love to help.
Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.